What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is one, AMC as a company seems to be undervalued at the current time. We have seen the fundamentals of AMC as a company significantly increase over the last 6 months. Now, I know a lot of you guys are thinking when I make that statement, well, this is a short squeeze play and the fundamentals of the company don't necessarily matter because, again, the shorts have not really covered in a substantial way. But I would slightly disagree with that statement that it's always better to have good fundamental news of a company that you are invested in rather than bad fundamental news. We're also going to be going over something very interesting happening with Ortex and Goldman Sachs signaling that they are going to be liquidating even more of their portfolios. And the retail sentiment in the overall market is starting to dwindle. Now, this is all really important information that revolves around the overall stock market. And as we've been going over in my videos in the past, the overall stock market and where we are at the current time with, I believe, the market teetering on the brink of a major disruptive event, these indicators are very important to look out for, especially when we're looking at AMC, who has been over-shorted by a lot of these different institutions, and we know there's a lot of over-leveraging going on. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. Now, when we're looking at the price action of AMC today, we're seeing an unbelievable day out of the price action. We're seeing AMC at the current time that I'm recording up about 12.5%. Now, we have been looking for AMC to break over this $40 mark. We may have to wait until the rest of the week in order to see this happen, or we could see this happen by the close of the market today or in the after hours period. Now, when we go over and take a look at Ortex, there is some really interesting stuff going on here. So the return shares today is about 14.51 million. The borrowed shares is about 10.87 million. So the borrowed change is a negative 3.65 million. So there was a net return of AMC shares today of about 3.65 million. Now, what's very interesting about this is that when you look at the return shares, a lot of people are looking at Ortex and saying, well, if they're returning a lot of these shares, then that could suggest that the shorts are covering. But what you have to remember is that there's a T+2 delay in when we're getting a lot of this information. So 2 days ago would have been last Friday. When we take a look at the chart of AMC over the last couple of days, we saw AMC decrease significantly on Friday. So with the amount of shares that were returned supposedly that day, if that were shorts covering, I would have expected to see an actual increase in the share price. So it is entirely possible here that what we're looking at is shares that have gone out on loan, but were not actually shorted. Now, let's get into how AMC is fundamentally undervalued as a company and what this means for us at the current time. So when we come over to this article right here from Investor Place, as I mentioned last time, sellers needed to dump their AMC shares before prices would rise. But analysts still expect the company to make $4.75 billion in sales in 2022. By then, the company should be free cash flow positive. In my last article, I estimated that its cash flow margin would be 11%. This means it would generate $523 million in cash flow from operations by the year ending 2022. So let's see what the prices would actually be of AMC in this analysis. Now, this is just one individual's analysis on AMC. In order to get a really concrete understanding of where the company is valued at the current time or in the future, they would need to undergo a full-fledged valuation analysis. But there are analysts crunching these numbers all of the time, and the numbers may be slightly different from the different indicators that they are using, but this is very important to note. So when we come down a little bit further, assuming that AMC eventually trades at a free cash flow yield of 1.5%, this is really the most important data point that is up for debate. Right now, according to AMC's last earnings report, I believe their free cash flow yield was somewhere in the neighborhood of 2.5%. Now, when you do these types of analysis, when the yield actually gets lower, the valuation of the company gets higher. So the stock would have a market cap of about 24.833 million, and that would give a market value of AMC of $48.37 per share. Now, if they lowered that yield even further, that would mean that AMC could be potentially worth $73 a share. When we look at what we're trading at right now for AMC, $38 a share. When we think about what everybody's main reason was for getting into AMC back in the early days when AMC was trading below $10, everybody had a really good idea of the short squeeze catalyst and the short squeeze potential that AMC had. But in the back of their mind, they were thinking, well, if the short squeeze does not play out, this was in the early days, so everybody was kind of thinking, well, if this situation does not play out how we hope it will, the fundamental value of the company is in the $20 to $30 range, so we'll probably make a decent return on our investment regardless. With AMC continuously getting better fundamentally as a company, they are coming out and beating those pandemic box office records, and when we come over here, we can see that AMC also reached that agreement to open up 2 new theaters in LA, and these were some of the highest traffic theaters in LA over the past couple of years. So we can see that Adam Aron and the executive team at AMC is really doing all that they can to boost the fundamental value of the company right now, and that just benefits us as long-term shareholders. So yes, there is a really strong short squeeze potential for AMC. I do see the height that this can go, the maximum value that AMC could potentially go. Nobody really knows when the shorts are going to start to cover, and nobody really knows how high the price that this can actually go. But either way, the fundamentals of the company could actually push the share price of the stock higher over the next couple of quarters. Now, let's get into this new Goldman Sachs situation. So we've been over this one situation, this one article that came out about Goldman Sachs earnings report in a couple of my previous videos. The basic takeaway that you need to understand from those last 2 videos is, one, that Goldman Sachs has essentially sold 25% of all of their equity positions, and they've been dumping on the bids that retail has been supplying. Now, keep that in mind. Retail sentiment in the market has been pretty high in Q2. When we come over to the 10-year Treasury, this is showing us that things are starting to change. When the 10-year Treasury yield starts to go down, prices of these bonds get higher and the yields start to decrease. This suggests to us that overall, people are moving their money out of stocks, which are riskier investments, and into government-backed securities, which would be Treasury bonds. This would suggest that in the future, we are headed towards one of these market disruptive events, but what we're really going to need to look out for is if the 10-year Treasury yield actually gets below this 1% threshold. So when we're coming over to this article right here, Goldman says, don't buy this dip, and here is why. At the start of the month, Goldman trader John Floyd correctly said that we are entering the best 2-week seasonal period of the year, with the first 18 days of the month traditionally being the strongest period for markets, and followed up with a prediction that shorts will have to cover, which they did during a period in which we saw 13 out of 16 days hit new all-time highs. Now, the shorts having to cover in this situation really just has to do with shorts in the broad market. So scrolling down a little bit further, we can see that this individual at Goldman Sachs is saying, don't buy this dip. I'm a consistent buyer of dips, but this wobble feels different, and I am bracing for a weaker tape this week. Negative pandemic headlines are picking up, and yada, yada, yada. But what you need to understand is when we come down a little bit further, we can see that overall right here, the selling volume, as we can see here, is picking up, but this little indicator right here, the Goldman Sachs high retail sentiment basket, has been significantly decreasing. So Goldman Sachs was really the first institution to start doing these types of sell-offs in their equity investments. So when we think about retail sentiment starting to decrease, what this means is that a lot of retail investors are no longer going to start buying. And if the institutions who need to liquidate and de-lever their portfolios, because 1, they're already massively over-leveraged, and 2, they foresee a major market event coming in the near future, then if retail then pulls those bids, the fact that they're all going to have to start selling off some of their portfolios, if retail doesn't actually start to basically willingly become the bag holder, the market is going to take even a larger hit because they're going to need to find somebody who's going to buy these positions off of them. Now, when you combine this with JP Morgan supposedly issuing up to 7 margin calls per day, Morgan Stanley coming out and saying that they expect a major market disruptive event to come in the near future and suggesting a 10 to 20% market-wide fall is probable, it is not looking good for our overall market. Now, we know that there is a lot of over-leveraging going on at the current time. Now, if a lot of these institutions start to get these margin calls and they're unable to meet those new supplemental liquidity deposits, they're going to get their positions forcefully liquidated, which means that all of these institutions are going to have less liquidity and collateral to put up for their other over-leveraged positions, and that could potentially be a catalyst for seeing the shorts start to cover the AMC and GameStop short positions. So that is really going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.